Everyone, thought we'd do a quick video to accompany the blog. It's quite a heavy, detailed blog, this, and in fact it's more a review of what the last 6 months have done and potentially what the next 9 months are going to do in the property market. So, as you know, we like video. We'd thought we'd do a video to accompany the blog just in case you'd rather watch me talk through it instead of reading it yourself. Obviously, we don't confess to have all the answers, and we are not mystic Meg when it comes to forecasting, but so far the conversations we've had with mortgage advisors, economists, behaviour analysis have meant that we've got a lot of the last 24 months worth of forecasting pretty much bang on. And the first subject within this blog that we wanted to talk about was inflation. As we talk through this blog, there is 3 different types of crisis that we discuss, and this actually comes from a behaviour analysis expert that used to actually work as an economist for the Parliament. And one of the things that he talks about is how these different types of crises can be broken down. So these are the 3 that he talks about. The first one is a creeping crisis. A creeping crisis, as put in the blog, is a result of a series of events that don't correlate to a pattern. It's a slow burn crisis is the second one, and this is an advanced warning before a situation turns into a real piece of damaged issues. Third one is the sudden crisis. The sudden crisis is the damage has actually already happened, and unless there's a response, it will continue to get worse. Much like you could say the Ukraine war at the moment, that is a sudden crisis. So they're the 3 crises, and we'll come back to those throughout the blog. First point that we wanted to touch on is inflation. Just this week, inflation was reported at, I believe, 9.4%. At the time of writing this blog, we actually said that depending on which reports you look at, it's somewhere between 8 and 10, and then it turned out that this week they reported it as 9.4. That's actually a 40-year high. So there is a lot of negative energy around the media at the moment, using obviously this as clickbait headlines to try and pull you in to engage and read their articles. So you've got to be really careful how you digest it. When we spoke to the economist, one thing that he did highlight to us was that actually when you break it down, probably 4% of that inflation level is as a result of the war in Ukraine. So when you actually look at what the organic or the natural inflation level sits at the moment, is probably more like 6 or just under 6%, somewhere around 6%. This is really just a result of £76 billion worth of new money being put into the UK economy with the likes of furlough and support throughout the pandemic. So it is to be expected that people have got more money to spend. Then when you put that alongside supply issues at the moment, where obviously factories, manufacturing and products had been of shortage, where people were put on furlough and not actually operating, it does mean there's a supply and demand issue, hence prices going up and hence inflation as high as it currently sits. This, he would say, was splitting into 2 types of crisis. The creeping crisis is the natural crisis, which is happening at the moment, which is a series of different events that don't necessarily correlate to the outcome at the moment or the pattern being caused. And that's where we sit around that 6% of inflation. The extra kind of 4% or 3%, depending on how you look at it, is what you would definitely call a sudden crisis, as mentioned earlier, which is a result of the Ukrainian war. So putting ourselves on the line, do we think that particular inflation level is going to have an impact on your property price over the coming months? And normally you would probably say yes. And yes is probably the right answer in a word, but in context, you've got to think about what we've experienced in the property market over the last 24 months. So are prices going to rise as quickly as they did the last 18 months? We don't think so, but are we going to see a crash in the market? We also don't believe that that will happen. When people use the word correction, that normally means that prices have gone up at this level and now they're going to start going down to correct that pattern. From our point of view, we still think there's a huge shortage of stock on the market, and as a result, we would expect with the buyer demand, even though interest rates have tripled in the last couple of months, will continue to climb at the rate that it has done. This probably means that we're going to see prices just creep around that 1 or 2% growth for the rest of the year. And that will see us probably take the year to about 7 or 8% growth on a 12-month rolling period, January through to December, which is probably about 4% less than the growth average of last year. So depending on how you look at that, it's an 8% growth in prices, but it's also 4% less growth in comparison to last year. Just watch out for the media. They love to use that as a little negative trick. Really for us, what we would say at the moment is the slow burn crisis is very much around employment and the shortage of employment at the moment, the shortage of labour. This is probably twofold. It's an impact from Brexit. We've seen somewhere around 1.2 million people go back to their European countries as a result of coming out of the EU. And that means there's a shortage of labour from the Europeans that were in the UK. We've also got a massive shortage at the moment of actually what we would call young working labour, people between 16 and 25. And as it stands, it looks like we're short about 1.8 million people in that area. And that's why it's really difficult to get good quality staff into those types of roles at the moment. And that's also having an impact in terms of the shortage of supply. UK is not the only country that's experiencing that at the moment, and if you look at the demographics and you look at the age brackets, Japan, Italy, Portugal, Germany, France and China are all finding the same problem. And in fact, Germany addressed that shortage recently and they allowed 800,000 Syrians to enter their country, and even though they've done that, they've still got employment levels as low as 2.2%. So that's quite interesting. Again, one of the media articles that you could look at is where the media recently reported that car sales were down 20% last quarter. Well, yes, they were down 20% last quarter because of the supply, not because of the demand. So it's not like less people are wanting to buy new cars. It's that there were less cars available to be purchased. The demand was there and they would have sold more. So if you look at that statistic in itself, the media have used it to manipulate the public into a clickbait scenario. It's not that demand is down 20%, sales are down 20% because the supply is not there. So we've just got to watch that space when it comes to reporting. The next thing that we always look at is the house price index reports, and there's a couple of great ones that we tend to use. Rightmove gives you an idea of what's going on live with pricing, and then if you look at things like Halifax and the Nationwide house price report, you get an idea on what the actual mortgage values have been going through at. And you can get into the land registry ones, but they're normally around 6 months out of date. I quite like the Zoopla one because it's got a lot of live data in terms of demand and supply. And I think a lot of people use Zoopla for house price reporting, and they're also great for tenant analysis as well. So when it comes to the rental market, that is the one market I would say which is continuing to get busier and busier and busier. And where sales is maybe not as busy as it was 5 months ago, it's still very hectic. But from a rental perspective, rental prices are up 5% just last quarter alone. So in 3 months across the UK, we've seen a growth of 5% on rental prices. And actually the average cost to rent a property in London, wait for it, is £2,257 per month. Where do people get the money for that? I mean, it's unbelievably high. So definitely the rental market is on fire. And if we look at why that's happening, there's been less landlords purchasing compared to selling. In fact, the stats at the moment look like it's 2 to 1, 2 landlords selling to every one that's purchasing. So there's less properties to rent. There's still a very high demand. And as we know, that's £76 billion worth of money gone into the economy. It does mean that tenant demand is very, very high. So if you are looking to make a quick buck and you've got money sat in savings, I would take it out of the bank where you're making absolute bobbins on it. In fact, inflation is causing you to lose money in the bank. I'd invest it in property where we're seeing rental prices go up and we're seeing property prices still go up as well. In sales, the Halifax report recently said that year on year, so this is from last month, year on year across a 12-month rolling, there's a 13% growth. And then if we look at Zoopla, one of the key facts that they put in there was that they reported demand last month is up 40% as a 5-year average. So if you take the last 5 years as an average, Zoopla are reporting that it's up 40% across that 5-year average. So has things slowed down since interest rates have creeped up? Zoopla are saying not, and they received the registration inquiries and viewing bookings. So that's live data as best we can see it. And they've also reported that the amount of properties for sale in the UK is currently down 33%. So we're a whole third down of properties available to buy on a 5-year average last month. And we're a whole 40% up on buyer demand. So you don't need to be a behaviour economist or a mortgage advisor or Einstein for that to work out that we've got a serious swing of demand versus supply as recently as last month. What is that going to mean to property prices? Of course, they're going to keep going up. And that's the facts of where we sit with the stats at the moment. Nationwide, in their most recent report, showed some interesting stuff for the South East. And actually, they showed a graphic that a massive 23.3% price increase in the southeast since the pandemic. So if you live in this area where we operate as Avocado Property, you're seeing nearly a 25% growth since the pandemic, and the report shows the average southeast house price is now as high as £348,564. So that's the cost of the average price in this area as it stands. Let's get into the bit that you've probably been waiting for. What is the forecast? What are the experts saying? And what do we think's actually going to happen with prices over the next 12 months? We spoke to a couple of people. We spoke to Dave Howarth, mortgage broker, fantastic mortgage advisor that we work with from AFP Mortgages, based in Crowthorne, operating across Crowthorne, Wokingham and most of Berkshire. His view, as he said to me on the telephone, is the market will slow down in context. That is because of the climbing of interest rates, but he does not think the market can keep pushing 12 or 14% year on year. So he's being very realistic with the fact that we've seen a huge boom last year. It can't keep doing that if mortgage rates keep going up. Talking to him off camera or without quotes, he does think that actually mortgage rates next year will creep back down. So hold this and watch that space. Also chatted with Dom, who's an independent financial advisor at Guardian, and he does a lot of work with Dan, Neil, Matt, some of the other Avocado guys. And one of the things that he said is that mortgage inquiries are still super high. And as inflation results in further base rate jumps, he expects the media to carry on with their good old bit of clickbait negative. But are they right this time? Are we heading into a market crash? The country, is it tipping into a recession? He doesn't really know the answers to that as it stands at the moment. He's got a view. He wouldn't go on camera and say that on record, but his view is it's still very positive. Mortgage applications are being written all the time at high levels. He feels positive about it, and he actually thinks the banks are just doing what they're doing with the interest rates at the moment because they can capitalise on a little bit of extra interest, but they're competitive and they want to lend money, so they've got confidence in the market. So as we said, we don't have all the answers, but in this kind of 2022, end of 22, looking into 23 market review, we feel that potentially, after doing all the research, looking at all the different statistics, we would probably say we're going to see just a little creep over the rest of the year, but nothing too significant. And actually, when we speak to a lot of the Avocado partners, which is really relevant because they're on the ground, they're talking to buyers and sellers all the time. People are thinking that are moving in the next year, 18 months. So they've got a really good handle on what's actually happening live. And yes, they do all feel that the property market does feel a little bit different to what it was in 2021 or even the first quarter of 2022. Open houses have slightly less volume of people coming to view at the moment, but the quality is still very much there. So although the numbers of viewings are down, the quality of people purchasing is there. And it just means if someone is sat in the living room as an estate agent kidding you on a really high price, it sounds too good to be true. It probably is. Price reductions are on the up. Don't get kidded by agents out there that are going to try and bait you onto the market by giving you a really high dream figure price. Last year, you might have got away with that because the market would have caught up with that pricing. It's probably not going to do that as aggressively this year. So you will end up sitting there thinking, what if we could get X? The agent buys into that as well. Before you know it, you're signed up for a 4-month contract and you're basically having calls from them to say, look, we need to get the price down. It's not right. So do we think we will go into recession in the UK? Well, at Avocado, we don't think so this year. If it was to happen, maybe the second half of next year, and there'll be a lot of different factors that will play on that. Is now a good time to move home? Well, if you want to move, then move. And if you need to move, then move. And if you're waiting for a market crash, don't gamble on it. We've seen this time and time again where people think there'll be this correction or this drastic crash. They sit in the sidelines, and before you know it, 5 years have gone by and they could have missed out on some serious equity growth, and they're buying a property at a much higher price. So we still think today's the cheapest day to buy a property. And if you've got any questions whatsoever, you can reach out anytime to any of us. We always love a conversation about the property market. Don't forget, Thursday we're live on YouTube, on Facebook channels at 6 o'clock if you want some Q&A. If you want to book a valuation, there's a link in the blog, and we'd love to come out and see you at your property. And thanks for either reading the blog or watching this video, and we'll see you all soon.